Ladies and gentlemen, good day and welcome to Balaji Amines Limited Q4 FY2024 earnings conference call hosted by Elara Securities Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing the star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Gagan Dixit from Elara Securities Private Limited. Thank you and over to you, sir.
Yeah, thank you. A very warm welcome to everyone to discuss Balaji Amines Q4 FY24 result. It is our pleasure to be able to bring to you the management of Balaji Amines Limited, led by Mr. D. Ram Reddy, who is the managing director. We would also like this opportunity to congratulate the management on its excellent set of numbers. So, with these words, I would now hand over the conference to the Balaji Amines management. Over to you, sir.
Thank you, Gagan. A very good evening and a warm welcome on behalf of Balaji Amines Limited to all of you who have joined us for this Concall to discuss the operating and financial performance for the quarter and financial year ended FY24. We appreciate your time and interest in our company's performance. I hope everyone had an opportunity to go through the financial results and investor presentation, which we have been uploaded on stock exchanges. We are pleased to announce that our performance in the fourth quarter points towards a positive trajectory. We have managed to report a resilient performance in Q4 FY24. Our top line has strengthened compared to the previous quarter with higher volume uptake, leading to improved margins driven by stabilized input costs on both raw materials and utility fronts, and a setting industry scenario. The rebound in domestic demand coupled with encouraging international market trends is contributing to this momentum and enhancing our margins. Recent developments include the successful commencement of N-butyl amines production at Unit 4, boosting an annual installed capacity of 15,000 metric tons. Furthermore, Unit 1 and Unit 3 have received BIS certification for Marpholin, enhancing our product quality standards. Both methylamine and dimethyl ether projects are progressing well, showcasing our commitment to operational excellence. We remain committed to our debt-free strategy, which continues to serve as a significant advantage for us by providing financial flexibility, enhanced creditworthiness, and improved profitability. Our goal is to bring innovative products to market, enhance and our product range, and develop advanced manufacturing facilities to differentiate ourselves from competitors and capture market share. Sustaining our leadership position in amines and their derivatives within the Indian market has been integral to our achievements. The broad assortment of specialty chemicals we offer remains a key differentiator, setting up apart from competitors. We foresee the fiscal year 2024-25 as a period of growth and improved market conditions, guiding us to maintain our leadership in amines and specialty chemicals. Now, let me take you through the consolidated financial operational performance. Revenue from operations for Q4 FY24 stood at INR 423 crores as compared to INR 392 crores in Q3 FY24. Total value stood at 27,984 metric ton for Q4 FY24 as against 26,903 metric tons in Q3 FY24. EBITDA for Q4 FY24 was INR 106 crores as to INR 83 crores in Q3 FY24. EBITDA margin for Q4 FY24 stood at 25% as against 21% in Q3 FY24. PAT for Q4 FY24 was INR 72 crores as compared to INR 56 crores in Q3 FY24. Diluted EPS for Q4 FY24 stood at INR 21 per equity share as against INR 15.24 in Q3 FY24. For Q4 FY24, amines volumes stood at 8,910 metric tons. Amines derivatives volume stood at 9,676 metric tons, and specialty chemical volume stood at 9,398 metric tons. On a standalone basis, we are a zero-debt company. Revenue from operations Q4 FY24 stood at INR 373 crores as compared to INR 314 crores in Q3 FY24. EBITDA for Q4 FY24 was INR 95 crores as compared to INR 64 crores in Q3 FY24. EBITDA margin for Q4 FY24 stood at 25% as against 20% in Q3 FY24. PAT for Q4 FY24 was INR 63 crores as compared to INR 42 crores in Q3 FY24. Diluted EPS for Q4 FY24 stood at INR 19.32 per equity share as against INR 12.82 in Q3 FY24. Coming to our standalone performance for the financial year 2024, revenue from operations in FY 2024 stood at rupees 1,359 crores as compared to 1,736 crores in FY 2023. The EBITDA stood at rupees 260 crores in FY 2024 as compared to rupees 339 crores in FY 2023. Our EBITDA margin was 20% in FY 2024. PAT for 2024 stood at rupees 171 crores from rupees 228 crores FY 2023. The diluted EPS for FY 2024 stood at 52.87 as against 70.18 per equity share in FY 2023. Now coming to the consolidated performance for the financial year 2023. The revenue from operations for financial year 2024 stood at rupees 1,671 crores as against compared to rupees 2,371 crores in FY 2023. EBITDA for the financial year 2024 stood at rupees 353 crores as compared to 624 crores in FY 2023. EBITDA margin for FY 2024 was at 21% as against 26% in FY 2023. PAT for the financial year 2024 stood at rupees 232 crores as compared to rupees 406 crores in FY 2023. Update on new projects and new proposed products. Looking ahead, we have strategic capex and new proposed projects, plans in place to fuel our future growth journey. We have initiated the capex for setting up the following plants, which will significantly contribute to expansion. Methylamines, the project implementation is progressing as planned. The project is likely to be commissioned around the end of December 2024. Electronic grade DMC plant set to commission in FY 24-25 holds promising prospects in India EV battery market due to its exclusive production status and a robust installed capacity of 15,000 MT per annum. Dimethyl ether. At Unit 4, we are currently working on a DME manufacturing project set to be launched by March 2025. Along with being a substitute of LPG, DME is used in aerosols. Thus, Bureau of Indian Standards is eyeing a 20% DME blend with LPG, recognizing its benefits in the works.
Sorry to interrupt, sir. Sorry. Your voice is coming as distorted. Hello, sir. Sorry to interrupt. Your voice is coming very distorted. Ladies and gentlemen, please wait for a few minutes. We have the management line disconnected. Please wait till the management line is reconnected. Thank you. Ladies and gentlemen, we have the management line reconnected with us. Thank you for patiently waiting.
Sorry, the line was disconnected. So the company has proposed to take up the following projects. Number one, N-Mill, 3,000 tons per annum, and N-Butyl Thiocoperic Triamide, which is called NBPT, 2,500 tons per annum. Isopropylamine. The company has proposed to manufacture isopropylamine mono dye in the existing plant of ethylamines at Unit 1 by modifying the existing ethylamine plant, which is not in operations, as we have set up a new and high output plant for manufacturing of ethylamines at Unit 4. Hotel business, with demand soaring and current occupancy at 85 to 90%, we have decided to add 40 rooms toward the south side of our existing structure building. This would cost us around 30 to 35 crores, promising to meet growing accommodation needs while maintaining strong revenue streams. We are moving quickly with our plans for a new 20 megawatt solar power plant.
Hello, sir. Sorry to interrupt, sir. Your voice is not clear. Could you just make the mic move away and speak?
Hello? Is this clear?
Yes, sir. Go on.
Hello? We are moving quickly with our plans for a new 20 megawatt solar power plant with MIDC Solapur, Maharashtra. Phase 1 involves setting up an 8 megawatt capacity, expecting to be operational by December 2024. We are also sorting out paperwork for net metering and land conversion to non-agricultural use, aiming to complete the project soon using our internal wells.
Hello, sir. Sir, sorry to interrupt. Hello, sir. Sorry to interrupt. Your voice is still not clear. I will quickly disconnect you and reconnect you again, okay? and gentlemen, we have the management line reconnected with us.
No problem. Hello? Am I clear?
Yes, sir, you're clear. Go ahead.
Yeah. Our steadfast reliance on our core strengths and competencies remains and cornerstone of our strategy as we navigate through the integrated landscape of the market. These inherent strengths not only serve as our guiding light, but also propel us towards achieving greater excellence in our role as a front runner in the amines and specialty chemical sector. Looking ahead, we are optimistic about the fiscal year 2024-25, anticipating a period marked by significant growth and favorable market conditions. We foresee promising opportunities on the horizon, and we are well positioned to capitalize on them. With our strategic initiative and robust foundation in place, we are confident in our ability to navigate any challenges that may arise and drive sustained growth in the upcoming year. Now we can open the floor for question and answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Nirav J. from Anvil Researchers. Please go ahead.
Yeah, good afternoon, sir. Thanks for the opportunity. So I have 2-3 questions. So, sir, one is on a standalone basis. If we compare our volumes this year for the specialty chemicals, they are close to around 27,600. When we look at FY22, these volumes were around 36,000 tons. So in between these 2-3 years, our volumes have fallen. So which of the products would have contributed to this fall in the volumes between these 2-3 years?
I think you are getting confused. One is standalone, one is consolidated.
I have excluded the consolidated numbers because consolidated numbers would have included...
The 36,000 tons you are talking, probably it may be consolidated.
No, sir. What I have done is I have excluded the numbers of our subsidiary out of the specialty chemicals. So the rest of the volumes, I presume, would be for the standalone business. Because I think that bifurcation happens in...
There may be 1 or 2 quarters, 1 or 2 products, maybe like that. But the way you are talking that 26 versus...
No, sir, 36 versus 28,000 tons.
There is also 8,000 tons is very easy. Anyway, see, one product that is acetonitrate, there was one boom. If you take that particular period, as of now, we are not doing anything in the acetonitrate plant. That is totally closed.
Correct.
Number one. And other thing is DMF. There was 1 year, 1.5 years, it went more than 70-80% capacity is operated. But all other times it is 40% and 35 to 40% only. This time we are expecting, once we start this unit, that is methylamines plant, we are expecting that we will continue operate this DMF plant because of the availability of the DMF.
Correct. So probably we are currently restricted by the availability of DMF or DMF because of which we are not able to...
Sometimes we will choose whichever is profitable. Like I have a good price for the DMF, I will not go for the DMF. Once the DMF is more available, then we will run both.
Correct.
DMF and as well as selling the DMF also will happen.
Correct. Sir, how was the markets of NMP, GBL, 2P, NEP during FY24? Are we seeing some improvement in the demand towards those category of products? Because I think 2021-22, you mentioned that even those products were doing well, which are normally the high-margin products for us. So if you can just walk us through in terms of the update on those products.
Yes. See, these products, what happened in between, a lot of reused material was coming. I don't know, God only can save these people. Many people started using recycled material, which is coming from China, which is after using 2-3 uses in the electronics, the material is removed. So that material, if you simple purification, you can show 99.9, but lot of impurities, metal contents will be there, which nobody will test. So that has given some impact. But going forward, what we are expecting, there are 2-3 out of 5-6 people for the lithium battery. There are 2-3 people are in a front run. If 1 or 2 comes, then our capacity will go 100% for the specifically NMP capacity, and 2P will be going full-fledged from last quarter onwards. It is going, and go forward also it will go full-fledged because the PVPK is operating at 100% level.
Correct. So let's say if we take our specialty volume basket as a whole, probably this category of products would be giving us the highest margin. So when the volumes comes back, probably the possibility of improvement in the per kg margins would see a upside here from here onwards.
It's not like that. There are many products. In one time, one product will behave. That depends upon the market. This is the first year we have seen that because a lot of people have started using the recycled material. Okay. Probably the FDA will come to the alert, then the things will change. But even otherwise also, as I said, the coming 1 or 2 years, you will see a lot of consumption will take place in the NMP because of this lithium battery companies. Got it.
Sir, let's say if we exclude these specialty volumes and see just the amines and the amine derivatives, predominantly those methyl and ethylamine products and their derivatives, what's your observation in terms of the per kg margins currently vis-a-vis before 2-3 years? So have you seen the contraction in the margins happening on the methyl-ethyl side on a per kg margins currently, or they have...
I will tell you. Or the answer is in your question only.
Yeah.
See, last 5-6 years, if you take, if you pause 1 year, that is the COVID period, that is last year, 22-23 was a different period. You cannot compare that period with any other year because that was a bonus period for all the chemical industry and pharma industry. Other than that, we were doing all 21-22 were the EBITDA levels, right?
Yeah.
This year also we have done this quarter. I can say quarter we have done 25, but if you take the year, 21% we have done, which is well within the limit. As per your concern that specialty did not do well, still we have done 21% on the yearly basis.
Correct. So this improvement...
So, you see, if the specialty adds for this thing, definitely it will be 23 to 24% of the EBITDA margins.
Got it, sir. And this improvement is predominantly coming from the methyl chain or the ethyl chain?
That is very difficult to say. It is a combination of the many products.
Okay.
Not only methane also, ethyl also, because there are many products basing on the methyl, many products basing on the ethyl. Using our own consumption, there the margins will change. So it is from the both.
Correct. The second question is on the DMC and the propylene glycol plant. So if you can walk us through how was the capacity utilization in Q4 as well as in FY24 for both these products?
See, it is operating presently 30 to 40%. You are well aware these plants were meant for the lithium batteries. Actually, lithium batteries companies, they were talking last 4 or 5 years, they were talking where they were coming just in, they were coming like this, they were talking. But unfortunately, nobody has done kickstart. Now we are discussing. There are 1 or 2 companies have visited the plant and who have seen serious in their commencement of the production. Then the DMC will start because it goes in the electrolyte. Otherwise, pharma and agro is very small quantities. That is about 3,000 to 5,000 tons was this thing. Even the consumption of dimethyl carbide was very less in these pharma and agriculture together. It was 7,000 to 8,000 tons maximum. But we have set up a plant for the 30,000 tons, including the PG, propylene glycol.
Yeah.
Because looking into this battery, lithium batteries coming up. So that has been delayed. Definitely in the coming quarters, probably before end of the year, at least one unit should come into the line where we should be benefited.
And we are using propylene oxide as a starting material for this DMC and propylene glycol, right?
Yes.
Got it. So our volume growth on a standalone basis was close to 8.5%.
Yes.
Any guidance for FY25 in terms of the standalone volume growth, what we are looking at?
Minimum 10% I am telling you. I am telling you very conservatively, but minimum 10% without considering any expansions.
And Q4 margin should be taken as a base margins on which we should start working on, and there could be some improvements going forward. How do you guide on the EBITDA margin?
It should be between 21 to 24. Minimum 21, maximum 24 should be there.
Got it, sir.
Sorry to interrupt, sir. I would request to the last participant to come up in the follow queue to any other questions. Okay. We move on to the next question. The next question is in the line of Rajiv Rupani, an individual investor. Please go ahead.
Yeah, good evening, sir. Congratulations on the improvement of numbers.
Thank you. Thank you, Rajiv. Go ahead.
Yes, sir. I had a question on BSE Unit 1. First question is the debottlenecking complete? What was the capacity utilization last year and going forward? And number 3, is the raw material issue behind us?
No, there is no raw material issue. Even still, there are some 2-3 months. Again, we have to take 1 or 2 shutdowns for completing this. While doing this debottlenecking, as I told earlier also, we are doing some of the product mix development also. Means, like instead of today, we are using MEA, monoethylamine. Now, we have come across in the R&D, we can use the diethanolamine also. If you use this combination, you will get increased value-added products like data, PIP will get more. So those activities going parallel. So in the current year, you will see, in the coming 1 or 2 quarters, you will see both the things, and you will see the capacity improvement as well as this combination improvement you will see.
Got it. Sir, my next question on BSE Unit 2. Now, have we received the environment clearance, number 1? Number 2, could you've given the list of products in the press release. So could you let us know the phase-wise capex and phase-wise which products will come up first?
See, we have taken, already TOR is already received. Right. And we may take or maybe first or second week of next month. Regarding products, the sodium cyanide will be the first product. And there are 6 products we are going in the first phase. One is triethyl orthofermate we are going to make, trimethyl orthofermate we are going to make. In the initial, hydrogen cyanide, sodium cyanide will come. Along with that, EDA, by using EDA, EDTA will come, and EDTA acetic acid will come, and benzyl acid will come, phenyl acetic acid will come, triethyl orthoformate and trimethyl orthoformate. These are the products coming in the first phase, which will take about 300 to 400 crores investment.
Once we are doing a capex of 750 crores, so once all this is complete, how much revenue will this BSC Unit 2 give us?
It's too early to say, but definitely it should cross 1,000 crores minimum with this Unit 2 alone.
Including all the products?
This first phase which I told you, 6 products, just now I told you.
Okay.
I am talking about 350 to 400 crores. And second phase, the additional 350, which will become total 750.
Okay. And sir, this will all be through internal accruals and little debt, or and we had planned an IPO also. Any update on that?
No. 99%, the first phase will be total internal accruals only. Probably when we start second phase, again that depends upon the operation of the first phase. Probably second phase, end of the second phase, we may need 50 to 100 crores borrowing.
Okay. Sir, my next question was on the methylamines new plant, which is getting commissioned in December. Sir, could you update once this is commissioned, can we expect higher utilization of our current DMF plant, 30,000 tons, number one? Guide us on DMF exports, anti-dumping duty on DMF, and that there was dumping of DMF by Saudi Arabia. Please update.
See, Rajiv, what has happened, as of now, we were working up to DMA is a separate plant, right? Methylamines is a separate plant, and DMF is a separate plant. So during this working, we will calculate the DMA selling price in the DMF. Once the new plant comes, then the one plant of DMA and DMF together will become one plant. So definitely we will be running 100% capacity. That is number one. Number two, the methylamine plant also will operate 100% capacity. And as regards to exports, we have started some small exports, including to Saudi Arabia, some few containers to Europe also, and now we are discussing with US also. So this also will take once we go in full operation with this new methylamine plant.
Sorry to interrupt, sir. I would request Mr. Rajiv, sir, to follow up in the question queue for further. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participants. The next question is from the line of Nilesh Gunge from HDFC Securities. Please go ahead.
Hello. Am I audible?
Yeah, Mr. Nilesh. Go ahead.
Yeah. Hi, sir. Good afternoon. Sir, my first question is on our investment in subsidiary. So we are investing about 750 crore and coming out with these products. So how much ethylene diamine will be consumed, let's say in a first phase, out of our capacity of 37,350? And if do we require any additional capacity of ethylene diamine for at least for a first phase of this expansion?
No, we don't need anything. We are trying to utilize 35 to 40% of our existing plant EDA, and we are trying to make some of the value-added products other than EDTA, like data and papergen, which I discussed in the earlier years also, that the new technology R&D was going on. That has come to a final conclusion, which we will hear in coming 1 or 2 quarters, that you will see less of the EDA coming out for the market from our plant.
Okay.
And you will see more of the value-added products like papergen, data, TEPA, PEHA. These are all products will come in line along with the EDTA derivatives.
Okay. And sir, when we complete our phase 2 expansion, as you mentioned earlier in this call, so do we require additional ethylene diamine plant, or this plant 37,000 is sufficient to take care of that?
We don't need. We don't need.
Okay. And sir, then currently we are selling this ethylene diamine in the market, right? And there is a good opportunity, import substitution opportunity. So when we add the value-added products, how much the contribution, based on your estimates, value add you are doing in the products? Any ballpark number, sir?
It's too early to say. That to see, whatever we are talking on the estimated figure based on the pilot and R&D. Right? Once that goes in the full stream in commercial basis only, we will be in a position to give it right numbers. But they are all definitely better than the current situation.
Okay. Yeah. And sir, my second question is on the methylamine side, sir. As you said that you are coming out with the 40,000 that is going to complete by about December 24. So how much out of this 40,000 will be captively consumed? And yeah, that's my question on this, on the proposed capacity out of this 40,000.
See, around 15,000 tons of the DMA will be consumed. Whatever DMA comes will be consumed in our captive only. The existing plants only will be catering. The new plant, entire DMA will go to the captive. Little of MMA will go into the market.
Okay. So currently we have 48,000. Out of that, 15,000 we are currently consuming captively. Rest is the market, and in the proposed capacity, from the proposed capacity, entirely will be captively consumed. Correct, sir?
Yes.
Yeah. Okay. Thanks for answering my question, sir. Thanks.
Thank you. The next question is from the line of Aditya Ketan from IFS Institutional Equities. Please go ahead.
Yeah, thank you, sir, for the opportunity. Sir, my first question is onto the demand side. Sir, last year we had witnessed there was heavy destocking, and with all the heightened geopolitical tensions, our numbers were also not coming. So they were in a bad shape. But now, so from the coming quarter, we had witnessed improvement in top line and margins. So what is your assessment onto the demand side, and whether these numbers are sustainable for the coming 2 years?
Yeah. See, demand, I can say, because of the raw material prices were lower and finished products were lower. The reason you have seen the revenues were not up to the mark. But if you see the volume year-on-year basis, there is an improvement of 8.25% of improvement when you compare to last year and current year. So this shows that definitely there is an improvement. Secondly, that destocking, yes, there is a in the Indian side, and from the China side, not like earlier, it is coming, but the prices are improved a little favorable to India. So the reason we could see better results for the current quarter. We expect this to move forward to the next quarter also.
Hello.
Sorry to interrupt, sir. Your voice.
Go ahead.
Yeah, sir, my second question, sir, if you can share the capacity utilization for DMF and for the acetonitrile business. And secondly, sir, what is the current status onto the acetonitrile? Are we looking to refurbish that plant for some other products like which can fetch it a better utilization? So what is the plan over there?
Acetonitrile, as I said, we were not working, but if the market improves, the prices, we are still working on that technology which we said earlier. That is still in the pipeline. Because we have got the other priority products, the preferred products, we have not taken that on the front bench. So that in the coming quarters, if the situation improves in the market, definitely we will revive that. In the meantime, as you asked, that we are also trying for some of the other products. If we can do, after doing these all 2-3 expansions, probably we will work out one or the other, but to try on the acetonitrile. What is the other question? What is the other product you said?
DMF capacity utilization.
DMF capacity, DMF this year, from this quarter onwards, you will see, will be utilizing more than 70%.
Okay. And sir, just one last question, sir. Onto the N-butylamine side, sir, you had mentioned into the presentation that the domestic demand is 8,000 tons. Sir, what is the global demand for this product?
See, we have gone for the 15,000 tons, even though domestic demand is 7 to 8,000 tons only. The reason being, if you see, we have shown one product, NBPT. For 2,500 tons, we are coming up with a product where this butylamines is consumed in that. That's the reason we have planned for the higher capacity.
Okay. And what is the global demand figure, sir, for this N-butylamine?
I do not have in handy, but I'll definitely try to give you, send a mail. We will try to give, because as of now, I don't have any idea.
Okay, sir. Thank you, sir. That's it from my side.
You're welcome.
Thank you. The next question is from the line of Aman from Augmenta. Please go ahead. Hello, Aman. Your line has been...
Hello.
Yes. Please go on.
Am I audible?
Yes.
Hi, sir. So I mentioned to some other participant that as and when you commission the methylamine plant, so then you will be producing the DMF. So it buys. So like previously in one of our earlier conversations, you used to mention that whenever the DMF prices is somewhere near to 100 to 110 rupees per kg, it is viable for us to produce. And currently, if we are seeing that the prices are around 60, 70 rupees per kg. So you are trying to say that like maybe after a year or so when the methylamines plant is commissioned, even if the prices are around 60 to 70 rupees per kg for DMF, it will be viable for us, right? We mean this, right?
Not 60. Current price is 70 rupees. Yes, it is workable. It's a lower margin. If it is 100, if you buy the DMF from outside also, it was viable that time. If the DMF price is 100. Making over DMA, yes, it is viable for making DMF with the own DMA. So all these days you are not having sufficient DMA. You are not operating fully, rather than you are selling the DMA in the market rather than making the DMF. Now once we get this new plant, we will operate the DMF plant fully and we will sell the DMA also outside.
Okay. So, sir, basically, we are trying to say that we will see all these improvements after a year or so, once the methylamines plant is completed.
It is from December onwards.
Yeah, okay. And also, sir, for this diethyl plant, which we are commissioning and we have got the license from the Indian Bureau standards. So, what is the dynamics? Like for example, how much it is imported currently? So, can you share the market dynamics of the same?
This is dimethyl ether you are talking?
Yes.
Dimethyl ether, we have not have the license, but the government of India is having a plans that they are going to make it mandatory to all the LPG manufacturers that they should blend 20% of dimethyl ether mandatorily.
Okay.
That time we will have the advantage as being a first manufacturer. But now it is already, notification has already come, it is under publication. That is number one. Number two, we are doing all the agro manufacturers, that sprayer manufacturers, where they are using today LPG. We are going to replace all of them. That is number one. Number two, all the commercial users, like industry and hotels and industry where the LPG is used for heating, there we are going to replace with the DME. We cannot touch immediately to the domestic because a lot of subsidy and other complications are there, which we have discussed with the government.
So, sir,
and our current capacity, we are coming up with a capacity of 100,000 tons, 1 lakh tons.
Okay. Understood. Thank you, sir. That's all from my side.
Welcome.
Thank you. The next question is from the line of Ranveer Singh from Nuvama Wealth. Please go ahead.
Yeah, thanks for taking my question and congratulations for improvement in numbers. We have a few clarity on data. You said that new technologies are being evaluated. So what is the current utilization in FY24 for data?
Data is not a separate, it's a total. As I told earlier also, I think you have not listened. Presently, the EDA plant, when you run the EDA plant, by default you will get only 5 to 6% of the data and 5 to 6% of the PIP.
Okay.
About 3 to 4% of the other product, and rest is EDA. Now with the new technology, we are going to get more percent of these products and additional value-added products also, and EDA will be reduced.
Okay, so
currently, because of when we are doing all these activities, we have operated the plant at 42% only, as against 72% last year. Because every month, you see, you cannot close fully and just to open the plant and do these developments. Every month we are running about three weeks, and 1 to 1.5 weeks we are doing this development.
Okay, fine. And have you captured any revenue from butylamines in FY24?
Yes, definitely we have sold 3 months. I think we sold almost 300 to 400 tons we might have sold. All the two products together.
So in FY25, what could be the capacity utilization here, butylamine?
Butylamine, as I said in the earlier question, we have done double to the Indian consumption, because we have a plans for our captive consumption in coming years. So we may do, if you take this total capacity 15,000 tons versus it will be 30-40%. If you take 8,000 tons, and then it will become 70-80%.
Okay, understood. Yeah. And third, on methylamine, that 48,000 capacity current have. So additional 40,000 is phase wise, or that will come 40,000 at once that is operational?
At one stroke, one stroke.
Okay. And on capex, 750 crore is on BSE. So what would be the total capex taking on consolidated level for FY25?
FY25 for the specialty chemicals, we have given on first phase about 300 to 400 crores in the specialty for that unit 2, where we are talking about the sodium cyanide and that other derivatives. And in Balaji Amines, we have about 150 crores, the balance of the methylamines, balance of the dimethyl ether, and tuber plant. And the one important thing is nobody is asking that captive power plant is going to take care of entire power of all the units in the coming years. We are going to commission this by December end. Before March, this solar park will be commissioned, which will help us taking care of entire power bill, number one. Number two, which will give us the good marks for the energy, carbon footprint.
Yeah, actually that was my next question. So in solar plant, how much capex we are doing there, and how much power saving we can expect from this solar plant?
We are doing actually total plan is for 20 megawatts, for which the investment will go around 120 crores. But in first phase we are doing 8 megawatts, which will be finished in this year. This is going to take care of about 60 to 70% of the power bill. The 20 megawatts, assuming all the expansions we have planned, even upcoming plants also will be taken care by this 20 megawatt. So the day will come, the 100% of the power will be utilized from the solar only after expansions.
Sorry to interrupt, sir. I would request Mr. Ranveer to please follow up in the question queue for further questions. The next question is from the line of Ritesh Gandhi from Discovery Investment. Please go ahead.
Hi, sir. Can you give us a little bit of an outlook on actually on the Peprazine as well?
Can you repeat your question, please? I could not understand.
Yeah, if you can give us a little bit of the outlook on actually Peprazine.
Peprazine. See, Peprazine presently we are having about 100% capacity, about 150 tons per month. We have the capacity presently. But since we are adding these mix of various technologies, we are expecting that we should do around 500 tons per month, 400 to 500 tons per everything goes well. What the R&D is done, it goes same in the commercial also. Then we will be doing 400 to 500 tons per month. That converts into almost 5,000 tons, which is equivalent to the country's consumption. Next.
Yes, sir. The current line of participant has been disconnected. That was the last question for today's call. I will now hand the conference over to the management for closing comments.
Thank you everyone for joining us, and thank you for the confidence showing on our company, for staying invested with us. I hope we have been able to answer all your queries. In case you require any further details, you may please contact us or Oriental Capital, our investor relations partners, by email. We will love to answer all your queries. Thank you once again, each and everyone. Thank you all.
Thank you. On behalf of Elara Securities Private Limited, that concludes the conference. Thank you for joining us, and you may now disconnect your lines.